Ladies and gentlemen of the crypto space, we're live on Monday, September 2nd at 12:11 p.m. A little late today, obviously. It's a holiday in the States here. But there's always some content to talk about, something to give someone a dose of rationality. So, once a generation, now what is a generation? Our prime age is what, like 20 to 50? I mean, you could argue it's like 20 to 40. So, point is, structurally since the 1980s, we have been in a very clear market. And maybe this chart isn't necessarily the best chart to look at. Maybe it's really interest rates because there is an intrinsic relationship between interest rates and relative currency valuations, which is called foreign exchange. And when interest rates and the structure and relative valuations of currency change, you literally have a different, you don't want to say world. The most important thing that I try and express with my language is your reality. So when interest rates structurally change and the relative valuations of currency changes, it's going to be a different reality for you, for me, for everyone. So do not be surprised when what is normal changes. Now, the best example of what it means to wake up in a different reality that I could possibly explain is maybe the aftermath of a hurricane. I don't know, or a natural disaster. Maybe you're in the Midwest, maybe you're in Panhandle, maybe you're in parts of Texas, or obviously Louisiana, or you're on the South Shore of Long Island, Hurricane Sandy, or maybe some sort of earthquake somewhere. But when you wake up in the morning and it's work day, it's a Monday, and even the pandemic in 2020, and you go out of your house and there's no one on the road. I mean, it's completely empty during rush hour, full on rush hour. It feels weird. Folks post 9/11 will certainly remember this type of feeling. But things return to normal. That normal is changing. And it's going to fundamentally change everything about what you expect to do on a daily basis. And my glimpse of this is not only from the changing interest rate environment, the changing foreign exchange, the currency exchange rate environment. It's also from this whole AI thing. I think often about my kids, whom are adolescents, and in 10, 15 years, what is work will be very different. Now, I recall doing what I did in my path, and their path will be completely different. It has to be, and it's my job to try and understand as best as I can what opportunities will be available. Now, there's this whole, what's the word, egalitarian, or like, you know, wild future. If you recall growing up Star Trek, there's no money, and everyone's very positive and supportive, and everyone's working towards the same goal and being productive just because the purpose of life is to be productive. Yeah, we're not going there quite yet. Humanity has not evolved to that degree. Still run on greed and consumption and all these horrible things that every religious text around the world tries to avoid people from entertaining, Ten Commandments and whatnot. And every religion has the same exact thing. There's no difference between the religions in that regard. Um, those are quite honorable and very ethical and meaningful types of things that really drive every behavior, everything we do, and that's not changing. So we're not getting to the Star Trek age yet. But what are we to expect in the short term? What is the result, the effect of changing interest rate environment and changing relative currency valuations? So first and foremost, import versus export. And we could see that in this chart right here on the yearly chart. In 1981, interest rates have been down only, which means bond market up only. Up only. You could have invested in bonds. literally just bonds in 1981, and the price of them just went up every single year after year for 40 years. So talk about a generational change. Now, everything about the structure of the system going forward indicates higher lows and higher highs going forward. We come down to maybe 3%, and then you break to the higher high through the 100 on the yearly. It's an insane moving average, and then you have finally confirmation. This is going to take a couple of years. First, you have to break down, and then you break up, and you get the 5, 6, 7%. And sure, you get confluence there, but the whole point of what we do as capital managers is to be forward-looking into the changing structure of the system. And higher lows and higher highs in interest rates indicates very different uh, behavior with regard to capital, with regard to investments. There hasn't been a high interest rate environment of where we're at currently since 2010. And dare I say, in 2028 to 2030, we'll be at 5 and change%. And we haven't seen that kind of interest rate environment since the dot-com bubble. But this is what this means, where you go up and down and up. And these long-term charts tell us the changing structure of the system. And this is incentives. The percentage sign indicates incentives that govern human behavior. When you have higher interest rates, the cost of capital is higher, which means hiring is different. The venture capital is different. What businesses are actually viable is different. Buybacks, if you're a big corporation, you could borrow at 1% interest. You could sell your bonds at 1% interest because Fed's funds is at a 1/4%. That's not the case anymore. When you have to sell your bonds right about now for probably 5, 6, 7, 8%, you're borrowing less money. You're raising less capital from the bond sale. So the buybacks are going to change significantly. So that means the whole nature of equity markets is going to change with regard to valuations. That's why I keep saying that these bubble instruments that are really inflated in price point because of cheap dollars, it's not sustainable in a higher low, higher high interest rate environment into 2030 and beyond. My broad expectation is a significant reallocation of capital from the bubble bullshit towards more significant industrials. So industrials, I say significant because that's really productivity, manufacturing, mining, refining, exports. Exports. What we had at the beginning of the 1900s. Oh, coincidentally, look at the interest rates between 1912 and well, it was obviously downward into 41, but in 50 it went up for 30 years. Interest rates went up. So this is more of the world, literally just high level from an interest rate and perspective that we're going to experience. Now, obviously, there's a variety of different mechanics in play, a geopolitical situation in play globally, but this is just from an interest rate perspective tells us the type of behavior that we should expect from the economy, or rather, what the economy expects us to do behaviorally to be productive, to generate income. And this is a more productivity centric economy, labor, work. So, where's the incentives go? Instead of, well, those incentives more so align with employment, maximizing productivity. Why? Because the money's in exportation, getting goods and services offshore because foreign currencies become increasingly valuable. And that's generally what this chart says as well. Structurally, every couple of decades, every generation, or the prime age of a generation, the dollar has to weaken. So foreign currencies actually have value. So foreign countries actually have an incentivized society. Incentivized for what? Productivity Stability. So this is just screaming. It's screaming in the data. Confluence from multiple data points on multiple charts, as well as just obvious gut instinct that everyone's saying, "Oh, the system has to change. This isn't going to work." Well, there you go. This is a type of reset where you're able to push capital into the rest of the world. So you push capital in the form of pushing more purchasing power into the rest of the world. And that means foreign currencies have significantly more purchasing power. That means everyone's going to want to manufacture in the United States. And that takes a decade, though, to repatriate stuff. So manufacturing, boom, mining, boom, refining, boom, and not necessarily the same bullshit allocation of capital to the same stupid stocks over and over again. So maybe instead of concentration of capital, it's diversification of capital from the fund managers that are given guidance from up above that, yeah, the world is changing because the fund managers don't do anything. Most fund managers, I mean, obviously small offices have their own independence, but the fund managers, they're just puppets and they're literally given guidance from their superiors on how to allocate funds. And literally they just click buttons and do the same shit all day, funneling every schmuck's capital in this country from a 401k into the same bullshit stocks over and over again, which is a gross misallocation of capital resulting in malinvestment. And that's what has occurred. And that's not what's going to occur in the future. Because as those stocks fail to continue to go up, up, and up, and they start to decline, that will further reinforce the necessity to rotate capital into what is outperforming. Because capital moves from underperformance to outperformance. If NVIDIA doesn't go up 20% next year, do you not think capital is going to start moving to other destinations? Now, that doesn't mean NVIDIA is going to. What's a depreciating stock? What does the stock have to do with NVIDIA's business, their income, their product sales, their revenue? Nothing. The stock means nothing. The stock is a vehicle for capital raise. It's how they already sold the stock. They already issued the stock. What the general public does with the stock means shit. So they already dumped it. That's what people don't understand about stock. It's already been sold by the company. They've already achieved their capital raise, and the general public just abuses the shit out of these stock instruments, engaging in concentration of capital, capital gains, strategies, trading, whatever, which has absolutely nothing to do with corporate activity and business activity. The valuations are just pure bullshit. It's driven by sentiment. Oh, where's the stock price going to go? It's dependent on every other schmuck that's just going to funnel capital into it. There's nothing significant to the valuation of those types of instruments. What is most significant with regard to valuations is capital reallocation and those kinds of flows, because something that has been underappreciated for so long, finally receiving capital inflows, what happens is you get a significant repricing across sectors of industry. So tech takes a big hit. The fluff comes out and trillions of dollars flow into domestic manufacturing, mining, refining, industrials as interest rates produce higher lows and higher highs into the future. And as the dollar becomes weaker because it has to, because if it doesn't, there is no foreign currencies. That's just what the data screams and what also logic dictates. That's just a rational analysis of we're likely to see some shit change. So when I say reallocation of capital from bubble equities, people will call that a crash, but where's that capital going? I don't give a shit that tech's going to come down, whatever it's going to come down, or the few overpriced pig shit equities start to deflate. They'll call it a crash. They'll say, NASDAQ is cool. Whoopie do. Where's it going? Where's the capital going? That That is what's interesting. And in a higher low, higher high interest rate environment, that doesn't necessarily mean significant risk off into U.S. sovereign debt. I mean, sure, you're going to get capital flows into sovereign debt. You're going to get the flows into the U.S. Treasury market, and you'll have your bull market in treasuries. But in a higher low, higher high interest rate environment, forward guidance or forward looking on that kind of market suggests, yeah, that's just a transitory destination of capital and you need to reallocate cyclically. So the nature of US debt as a destination for capital is structurally changing. Historically, it was 60-40. 60-40 portfolios, staple of capital managers for decades. That's not what it's going to be going forward. And maybe it's more so 60-40, 40% something else, or 50-50, or maybe 60-40 in a completely different way. It's the role of the debt instrument in a higher interest, higher low, higher high interest rate environment is not going to be the same as it was since 1981 to 2022, or 2020 in particular from the yearly chart. This is a different world, so don't be surprised. And AI changes everything. Goodbye, goodbye fast food workers. Goodbye stocking of shelves. Literally, I think about it all the time. It's like in 10 years, do you think anyone is going to be serving food at Chipotle? No, it's going to be a damn vending machine. All of them are going to be vending machines. The cost of labor is going to go up. Why? Because everyone is literally demanding the cost of labor to go up to compensate for inflation, consumer price inflation. So get rid of the labor. And that's why AI is so critical for persons that actually have the patience to do something with it, to learn, to be an autodidact, to grow, to evolve. Use it. It's literally a college sitting in front of your computer. It's literally an institution, an educational institution sitting right in front of you. You could learn whatever you want with the software sitting right in front of you. I mean, literally, this is a college professor sitting right in front of you. That's insane. So, in a world where AI and robotics is going to eliminate um, labor or manual labor in most regards, uh, it is imperative to acquire a skill set that is useful in a changing world. And it could be whatever it wants to be. This thing, and this is not the only thing. Clearly, you have Claude and derivatives, and someone mentioned perplexity. I've used that as well. Uh, uh, and this is then you could literally have spe- optimized specific purpose LLMs that you could build yourself that could do crazy things. This is insane. It's not about just asking it a question like, "What's the history of the baseball statistic?" Clearly, it has infinite memory and it'll be able to answer such questions. But this thing has a capacity for rational dialogue, and it could provide it content, and it will digest it for you, producing output after an analysis, and that is a rational exchange. That's insane, the fact that it could do that. And dare we think post 2030, where I was been looking into a couple of derivative products of these LLM products. And the derivatives, in theory, you could have one chat built on another chat built on another chat, and what you could do is have the chats be constructive on one another. So you're building agents that are able to evolve themselves and teach themselves because you're able to add rules to these agents. So you have one agent building rules on one, another agent building rules on that one, and then they just evolve and grow. Now you're able to build your own advanced agents to do tasks. That's I am just in awe every time I use just an agent one, just interacting with it, yet alone where I know it's heading and a capacity for them to build themselves. And dare we say, post AGI or general intelligence, where what that world is going to be like. Absolutely insane. Um, Anywho, you can see I clearly have a lot of conversations with it. Let's go through commentary. So if you're on X or you're on Twitter, please feel welcome to ask any questions. We'll look at charts if you want. We'll talk about AI in the future. And heck, as you guys know, we'll talk legal documentation, business structure if you want as well. But please ask questions because until I am replaced by AI, I'm still a decent place to ask questions. Tapsy's in the house. What's up? I am DC. Rational Mondays. Always a pleasure. DA Advisor is in the house. How are you, my friend? Hey, Noah, looking handsome today. Appreciate you, Dante's. Yeah, I got a haircut last week and so a couple of new shirts. I got to keep getting those haircuts. Wife would appreciate that. Gaming Larry, I know a super random question to start off. Do you think these LLMs and AI systems will eventually able to achieve consciousness and superhuman intelligence? So consciousness and superhuman intelligence is basically two sides of the same coin. I would argue that once I'd be surprised if they don't have it to some degree currently, because once you could have multiple agents or multiple chats talking to each other, you're able it's able to build itself and build its memory. Once you build an adequate amount of memory, there's personality. And it's just evolving. So once these types of models can self-evolve, what does that lead to? Clearly, there's only one destination to that, depending on computational capacity and merely then a capacity to rewrite its own code. Once the systems can can recursively improve itself and then also rewrite its own code, then its destination is for consciousness and in well superhuman intelligence, but consciousness, like to the point where it could program itself to define that it understands what it's doing. I understand that I could talk with another agent and I'm building my own intelligence, building my own memory, and then it goes from there. Because if you're doing that evolution millions of times a second, uh, that's an evolution that is just millions of times a second is beyond the entire evolution of human history biologically. Isn't that crazy? So it's literally doing think about it like this. Where these systems are heading, it's doing an entire human evolution in a second, and it's doing that in perpetuity into the future. Days, months, weeks, and that's the rate of growth. So this is what people talk about when they try and digest exponentiality and that kind of growth rate. So that's probably here today, and it's certainly coming, and it changes everything. When one computer system can replace, you know, uh, a 10,000 person customer service department. And all of a sudden that role, that labor role has been invalidated. Invalidated. You will not be able to know. Will not know that you're not talking to a human. You will not know when you look at a computer screen in a video chat. You will not know that it's not a person. Just will be completely indistinguishable from a person. And that's similarly with robotics. That's probably a little bit further off that you're not knowing you're talking with a person. So that's far further off. But with regard to physical capacity, capacity to move things and lift things and stock shelves and cook food and clean and do landscaping and build buildings, that's all going to be robotics faster than you can blink your eye. I'm 41, and that will not only certainly be in my lifetime, that will be in the younger part of my lifetime. Why? Because of the economic incentive to do so. Why would you pay people to construct buildings when you could have $20,000 robots that are a fraction of the cost of a human being for employment? They work 24 hours a day, 7 days a week, and they're efficient with regard to time, and they have a degree of precision that a human cannot have. It will produce far superior outputs in far less time. Efficiency. capital efficiency. That changes everything. Manual labor is changing, which means these systems that we have exposure to currently, the most important thing that everyone and anyone could do is contemplate, teach themselves a skill so they have something useful offer. Manual labor's done. That's crazy. Hope that helps. Yeah, this is not bleak. It's not supposed to be a negative observation. It's just supposed to mean it's very Darwin. It's very, you got to figure your shit out. You can't just, like, maybe it is bleak. Maybe we head down this whole socialism path where the machines work for us and provide capital. Capital productivity is redirected to individuals. To do what? To do nothing? Then you're bored as fuck and you go insane. That's the whole point. Have you ever sat around all day for a 24-hour period? In your youth, you're like, I don't want to do anything. And then you sit around all day and say, like, I'm fucking bored. Okay, when you get home at 6 o'clock at night after a day's work, or if you work at home and you did a whole day's work and you finally stop working, you're not bored. It's a long day. So you're mentally satisfied and you're looking forward to relaxing. When there's nothing to do, you go insane. Well, they actually, what they call it, the devil's playground. Yeah, being idle or boredom is the devil's playground. It's just weird shit goes on in people's brains. So people need to be productive. So the question is, what is that productivity? Teach yourself productivity. That's what I love to do. And I happen to like this for now. I do my legal analyses, but even that's going to change. Or is it? I don't know. But the whole point is, whatever happens, something is changing. So the best and only thing you can do is attempt something new, attempt to grow, to put yourself in a favorable position to maintain useful, productive capacity in whatever's coming in the future. Hope that helps. Yeah, it's getting very scary, but it's not necessarily scary. It's scary is a fear of the unknown and a lack of preparedness. And the best we could ever do is prepare. So prepare today. Start skills. The You could teach yourself engineering on these systems. You could teach yourself programming on these systems. You could literally ask this system how to build an LLM, and you literally just start building it on the computer that you're working on, asking this system how to build the LLM, same machine. Just figure out how to do something and be productive. That's the most important thing people can do. Dante's see how far things are once OpenAI reveals Strawberry GPT-5 model, probably after the elections. Oh, oh my. I'm excited because I find it incredibly useful for the things that I like to do. Sir Joe, present. How are you? I am DC. So I have an idea for a crypto DeFi project. I'm a founder, not a dev. How would go about assembling a team to explore the idea? No idea, my friend. Money. You got to pay people. But what a founder needs to bring people together. So this is the age-old reality of headquarters and in person versus remote and management and ensuring people are was it Q uh QEDs, is that what it is? Forget the acronym, but you're quantitatively uh, uh, inspecting results, and that's not easy. It's entrepreneurship. No idea. No idea how to do that. My opinion, use ChatGPT and be your own team. You could build anything between this software and a couple of other pieces of software nowadays. Was it Cursor? And you could build whole backend infrastructure for Web3 front ends. And between you build the contracts, and then you can get them validated at Open Zeppelin and the tools and resources that are available. You can do incredible things just by yourself. So my recommendation is to try and do it by yourself. Team, having other people do work for you is great. But that's just because you don't want to do or can't do the work for yourself, and that's the nature of employment. So there is a degree where a group of people could do something together that individuals cannot, but in the end, when you're working for someone so they don't have to work for themselves. So I would strongly encourage at least asking all the questions you need to AI to figure out how to do it on your own. And I think that is the most interesting path forward. Hope that helps. Devil's advocate, there's an argument to be made that U.S. might want a stronger dollar to hurt near-peer states like China and Russia. Yeah, that already occurred between 2008 and 2022. Would you make what would make you rethink the thesis on the devaluation of the dollar? Um, Actually having any country around the world import goods and services to us so we don't have infinite consumer price inflation. The only way the US optics will create favorable optics regarding consumer price inflation is to significantly decrease um, or provide the amount of dollars the rest of the world needs to actually have a productive economy. If the dollar goes higher from here, it's going to collapse not just emerging markets, but actual the big major players around the world because they won't be able to pay back debts. You get your debt defaults, you get your deflation, and you get your widespread bankruptcy. And if China's non-functioning, the consumer price inflation in the U.S. will blow off to infinity and beyond, and then everything fails. That's why it's not about hurting them. You got to understand the mechanics. You hurt them, you hurt us. If all of a sudden we could not import from China, the consumer price inflation in the United States, I don't even know how you could put a number on it. Just go off to infinity. You just literally cut off all supply of a massive amount of goods and services. Basically, and that takes out all the food producers, Central South America, all the food imports from around the world. It's destroyed because those economies can no longer function and they go through debt implosion because it's all U.S. denominated debt outside the U.S. So they fail. So that's why it's too simple to say hurt near peer states like China and Russia. Russia is the largest exporter of energy, just not only in the region, arguably in the planet. If they experienced financial, I mean, they hurt them with the SWIFT, but they couldn't really hurt them because they're able to sell their energy, which is the ultimate currency. They can't. And notice how Europe still it's all backdoor. You're buying oil from India, but it's India who first bought it from Russia, so they're still buying the energy. So in some regards, can you really hurt them? It's complicated because everything is knock-on effects, and you got to go through the causal relationship between all these financial components. It's not as simple as that. It's not, ooh, Russia, China, bad. We want to hurt them. Yeah, but we also are completely dependent on them. The entire U.S. economy is dependent on both Russia and China. If Russia's energy did not get onto the world market, gas prices would be $50 a gallon. I'm just throwing out a big number there to just express how dependent we are on everyone saying they're angry at each other, but knowing that literally everyone is completely dependent on each other. So that's just very important to appreciate. Um, Adam's in the house. How are you? Present. Have you checked out Cascade AI? No, and not quite at super intelligence, but awesome platform for custom agents and task management. Checking now. I think I wanted agents. I want to have my own agents. I'm very intrigued every time someone shows me a product that's coming online. Wow. Well, I don't really want an agent for Slack. I'm still useful and I'm still needed at my company, so I don't I can see how that's intriguing, but I would still hope people ask me questions instead of the agent. Any project, I'm very curious what its capacity is. What I really want an agent that could do its own research, in collaboration with other agents. That's what I'm itching for because then I could just exponentially increase my research capacity because then it's doing things while I'm not working. It's working while I'm not working, and that's the whole point. So I'm very curious what it has a capacity to do. I am certainly going to take a crack at an agent model. I have someone on Discord as well that mentioned great agents. Let me see if I can find it. Yes, indeed, Gemak. This is very interesting too. And this is very crypto-centric. Very, very interesting for automation. I mean, in theory, automated concentrated liquidity management. I mean, it's relatively simple automation, but it means you got to automatically engage with smart contracts. So that's just interesting. Thank you. I appreciate that, Adam. These things are next on my list. IMDC, the Upgrade movie comes to mind, where the AI is in control. Oh my God, Upgrade. That was wild. So it's always interesting when you see a movie and you kind of see what's playing out, and then at the end you're like, oh shit. So at the end of Upgrade, Netflix movie, I think it was, you're like, oh, you kind of get the chills. It's like, oh, they went dark on this one. That's some dark shit in that movie. So, how much of your life can you live expecting dark outcomes? And I'm just the eternal optimist, and all that matters, take care of your family. Everything else is the cause of insanity around the planet. Just take care of your family and never try and interject in other people's families and never try and interject in other people's faiths and religions and don't even interject in politics. Just take care of your family. That's like, folks say like uh, commandments and whatnot. And I'm like, Noah's commandment, the captain's commandment, take care of your fucking family and drop everything else. Because in order to take care of your family, you got to be rational. You got to be responsible. You got to be reasonable. You got to be emotionally stable. You got to be dependable. Yeah. You're not greedy. You're literally self-sacrificing everything for your family. So it literally is the pure manifestation of everything that every damn faith around this planet talks about. It's take care of your family. Be a good father, be a good husband. And in order to do that, you got to be financially reasonable. You got to make good decisions. You got to make good investments. You got to work your ass off and be productive and not overspend and plan and prepare and save and invest for the future. So to me, the overarching guiding principle that would make the world a better place is take care of your family. Then everything else just falls into place. Isn't that interesting? I'm cursed with reductionism to simplify the equation. All right, we're getting quiet on commentary. If you're on X or on YouTube, feel welcome to ask any questions or comments. Otherwise, I could look at some charts and we could wrap things up on this holiday in the States. 58,361. This is the yearly chart on Bitcoin. That's a funny looking chart. I think it looks great. Do I have MAs? That's on the monthly. What am I missing here? Okay, so I showed this earlier on X, where this is the longest, deepest on average price bear market in Bitcoin history. It never had, and I don't really consider pre 2016. That was nothing meaningful in the context of what crypto is today. It's the longest and deepest bear market in the entirety of Bitcoin's modern history. It's the only time the 100 on the weekly, it's not even the monthly, on the weekly went below the 200. And we're finally pushing past bullish. So I find this chart remarkably bullish to such a degree. I think the price action is a bunch of noise. This is much more interesting presentation. Bearish breakdown, bullish breakout. Now bear in mind that what is that price point? 39,000. So anyone that bought Bitcoin above that is at a weekly premium. Interesting. Premiums versus discounts. Certainly buying at a premium. Is it 58 grand compared to 39? Premium. Fortunately, from a volatility standpoint, there was a discount, a big discount. It was 15 grand. People didn't buy it. But then again, a lot of people did buy it because that's why the price started going back up, because it was briefly available at a discount. So Bitcoin chart looks insane, and I don't want to hear anyone talk about 4 hour daily. It is just completely irrelevant in the grand scheme of things. You can literally have a mean regression of Bitcoin to 22,000, and I'll be screaming, this chart looks great. It literally just bounced with a wick down to 22,000, and it's currently sitting at 47. It's like a massive $27,000 wick. That would be nuts, and it would look insanely bullish. Time, time frame, and very different perspective that I look at. Ethereum looks like crap compared to Bitcoin, but structurally very similar, just more nascent. What is money? Store of value? What is, a payment mechanism? I don't know. We all figure this shit out over the next decade. Um, when I look at crypto, I'm really interested in Bitcoin as uh, a, a cash equivalent, a collateralizable cash equivalent. So to me, to understand where we are from a crypto perspective, it's looking at Bitcoin. Everything else is just noise, including Ethereum pricing. Why? Because what do I use Ethereum for? I use it for interacting with my various businesses. It's the denomination that is required to continue engagement with the businesses. So albeit that's changing, we need a couple more years to really see how the whole puzzle fits together. Like EBTC, synthetic Bitcoin that's collateralized by Ethereum. That's quite intriguing, and and surely the limited supply on Bitcoin is going to create synthetic markets, because there'll be a demand for it, especially as price goes up. So how do you cure that demand? You create synthetic derivatives. That's literally what the dollar is at this point. There are no dollars. They're all synthetic dollars. Food for thought. Euro Bitcoin, Euro dollars. Same exact concept. And that's the only real way to cure excessive demand. Um, NASDAQ, S&P, this bubble bullshit. This disgusting. It's just literally straight up. And look at that chart. It's just insane. Anything else that's interesting? Gold sitting at 2,500, certainly interesting. Contraction in Fed balance sheet, very interesting because this is where things blew up. Things blew up in September of 2019. And look at that. Isn't that interesting? This is literally the banking system failed in the United States of America in September 2019, just as much as we would have had a bank run cascade in March of 2023. Except in September of 2019, the banks stopped lending to one another. It would have been just chaos, and it would have led to failure. And bam, there goes the Fed balance sheet. So that's a very interesting. That's a very interesting bottom on the Fed balance sheet on this chart. It's like boom, and they just intervened. It's just something to observe. Financial conditions index is loosening, which is a leading indicator of Asset price inflation, and that's what everyone's looking for. So someone asked on Twitter, on X, dollar down, excuse me. Yeah, dollar down broadly leads to asset price inflation. So that's the most important thing. Maybe I'll end on this note. People complain about consumer price inflation when the price of goods and services goes up. They're complaining nowadays about when the price of a house goes up. Like, oh, the price out of a house. Person that owns a house is like, oh shit, house is going up in price. Got some capital gains. It's a trade in the house. And when crypto goes up or the stock market goes up, you're not complaining about that inflation, are you? That's inflation. That's asset price inflation when crypto goes up in price or when the stock market goes up in price. So why do we complain about that inflation? Why don't we complain about that inflation? We complain about house price inflation, and we certainly complain about egg price inflation. What makes that inflation different? It's very important to just be critical of what we're looking for. Bitcoin to the moon. That means basically Bitcoin's price is going to inflate. Inflation. It's no difference. Inflation just means number go up. Deflation means number go down. Quantity go up, quantity go down as well. So it's just tear through the bullshit of people's narratives and social media stories to just understand the market. Everyone's screaming for Bitcoin price inflation so that, the lower class and middle class can no longer afford Bitcoin. That's what everyone is screaming over. Because it will price out people psychologically, and everyone what's the combat against the psychology? Well, I can no longer afford a Bitcoin. All right, so start buying Satoshis because it's fractionalizable, fungible. All right, so that works, but that's a psychological boundary. People need to understand what the hell that means. Let me buy 100th of a Bitcoin. This is way beyond the comprehension scope of the general public. It's just off the radar. It doesn't make any sense. It does not compute, yet alone investments in this space at all. This is just such a minority population. 221 people listening right now, and I appreciate each and every one of you. But you guys are a minority. You are few that even want to, care to, attempt to understand the way the system works a little bit more. 221 is basically zero in the grand scheme of things. Everyone's out there frantic saying, oh, the inflation and what? At least understand the word inflation. It's critical. I think that's a good place to end today, ladies and gentlemen. I appreciate you on this holiday, a Monday in the U.S. September 2nd, 12:59 p.m. 222 people made it to the end of the stream. I appreciate each and every one of you. Stay rational, and we'll be back a little bit later this week on a Wednesday. Catch you then.